All right, starting next week, some surprising nationwide changes are coming to the mortgage industry.
It's part of an effort to make home buying more affordable for people with less wealth.
Starting on May 1st, people who have lower credit scores may get more of a break with upfront fees. This is people who have better credit scores may still get a lower rate, but may end up paying more in fees.
For example, closing costs on a $300,000 loan with a credit score of 659 could end up saving $3,700. But if your credit score is 740 or higher, you could end up paying $375 more.
Now, you need to know this only applies to loans through Fannie Mae and Freddie Mac. 7 Action News reporter Faraz Javed is diving deep for the answers and how it can impact a homeowner's wallet.
If you're a first-time home buyer or a homeowner looking to refinance your property and have good credit, well, get ready to dig deeper into your pockets.
I just give God the thanks and glory that I'm doing what I'm doing when it's happening.
73-year-old Linda Jones just sold this $200,000 home in Ferndale to move into a $140,000 house in Warren.
I'm downsizing, hoping it's going to help me in every way.
Linda's happy because her mortgage was processed before May 1st. That's when the new rule by the Federal Housing Finance Agency comes into effect. To understand the why, what, and how, I met up with Melinda Wilner, who works for America's top lender, United Wholesale Mortgage.
The purpose of this, I think, was to help make housing more affordable for more people. So it was kind of in the lower lines of credit score, making it actually cheaper for them than what it was before. And to kind of subsidize that or to compensate that, it actually made it a little bit more expensive for higher credit scores.
Do we know if it's a fee or it's a percentage?
It's kind of both. It's really just an adjustment to the loan based on the loan amount. So sometimes that amount is built into the rate. I would say often it's kind of built into the rate that a mortgage professional will give to you. And sometimes you can also, pay part of that rate instead of paying it in the rate, have it as a fee. There's not an across the board. It's in a matrix, and all the different boxes change by a different amount.
Is it for new homeowners? Is it for existing homeowners?
It is across the board. It's not specific to just first-time home buyers nor existing. And I want to say it's a little bit heavier on the cash-out refinance side of things, too.
Last year, United Wholesale Mortgage processed nearly $128 billion in home loans. Melinda says the mortgage industry goes through a lot of changes. Hence, the latest rule won't be the last. Meanwhile, a Metro Detroit realtor of 8 years, Eric Jervis, is excited about the change because most of his clientele will benefit.
The idea of this program is to benefit those first-time home buyers, to people who have been, trying to move out of mom's basement or who have lost their house during the pandemic to get back into the housing market.
Eric says every dollar counts for folks with average credit or first-time home buyers who don't have established credit.
Someone who's buying a $500,000 house, that fee is not going to affect them. But again, $50 a month to a person who's just making it, that makes a huge difference.
Now keep in mind there is no one size fits all when it comes to mortgages. So Melinda's advice is to go through a broker because they can get you the best possible rate from various lenders. Reporting for 7 Action News, I'm Faraz Javed.
All right, Faraz, good to know.